Alright, so this is going to be part 2 of the Gap Trader video, and I think that I'll probably stop here for now with the information about this indicator. And the last place that I left off was talking about probabilities of gaps, probabilities of gap fills depending on where you open inside of the session window of a gap, of a candle. And I was talking about S&P 500 futures and the possibility for a gap to be filled based on where it opens inside of a previous session candle. And yesterday was a green candle, and I remember I showed the actual green candle candle body of the previous day's candle. So one thing that we can look at here is I do have another important indicator that I'm going to paste on top of here right now, and this is called the candle plot MTF indicator. I'll take these guys off. And I'm going to put the previous candle to a day candle. And I'm only going to do this because I'm about to... Oh, that's nice. There we go. Not enough data. So the previous day's candle, if we look at it, was this big red-green candle. But I'm showing the entire session from start to end for S&P 500 futures. But remember, I don't want to do that. What I actually want to look at is the previous session window with respect to the cash open and close of the session that I'm talking about, in this case Central Time, so 9:30 to 16:15 Eastern Time. And I want to look at the candle to match this guy's candle, because I want to talk about these probabilities of the previous close being filled. And we actually did fill that previous close. You can see the little X that was printed right here. This little X was the previous session. Before, when we were looking at this chart, it said previous close unfilled and said pre-market. And then as soon as it flipped into market hours, meaning past 9:30 in the morning, is when that flipped over to previous close unfilled. And as soon as the price intersected that value during the session, this little X was printed and the label actually goes away. So one thing to look at, Gap Trader offers you some extra little pieces of information. And besides just the previous close, you can see the previous open, the previous high, and the previous low. So this horizontal cyan line is the previous high. Horizontal pink line is the previous low that I have set here. And you can turn these off or turn these on. But remember, these correspond only to the previous session inside the window that I show. So the cash hours only. This is showing the previous low in that window, so 29.2350, and the previous high of 29.6475 inside this session window, so only for the cash hours. I can also show the candle body color, which I have actually done in an interesting way that's not like the candle body, the candle plot, the multi-time frame candle plot indicator. It's actually overlaying the previous day's candle body over the top of the current session. And remember, when I was drawing the previous session, I drew a green candle. Let's just make this different color green. I drew this green candle from 9:30 in the morning on the previous day. Let's find where that is. So 9:30, it opened here. No, here. It opened at 29.27. right about there. And the close at 16.15 is right on this yellow line. So right there. And if I did some little wicks, this is the session window from the previous day, right up to that previous high. Got that. And then here's that previous low, where that pink line is. This candle right here represents the previous candle body, and it's overlaid the next day onto the current session window. Right? So, what does this show us? This is a helpful guide, and I built this indicator in order to show these kind of gap trading probabilities in order to fill the previous close. So if we're opening and the market open was, this was right here at the market open at 9:30. 9:30 open was somewhere around right there. If we're opening between the previous close and the previous open, we are inside of this open close range inside of this candle, and that has a 75% chance of moving up to fill the previous close, which it actually did. So this trade was worth about 8 points, so maybe $400 trade. Let's see, so the open here was 29,3975 and the close, so yeah, about 8 points, so about a $400 trade per contract. So when I was trading this morning, I actually advised the trading group that we had a 75% chance of opening, since we're opening between the open and close yesterday, and yesterday was a green candle, and it was a huge day also, that the odds of filling that close were extremely high. So there's a lot of other there are many other ideas behind where to place your stop in a trade like this. If you're just going to buy the open blindly, which I did, you're going to have some drawdown likely in many of these trades, and the drawdown was something like 7 or 8 points to the downside. You can't hold a trade like that forever. Some gaps just don't fill. And this could be one of the 25% times that it doesn't actually fill on the same day, and we have to perhaps wait until someday in the future for this gap to fill. But these types of probabilities, 75% is a great trade. If you show me a trade that wins 3 out of 4 times, I'm going to take that trade every time. And the lower the gap down, the better inside of this green zone. If we were to open between the low and the open, the cash open yesterday, so somewhere in this zone, if this is where we decided to open, then those odds change and they're not so great anymore. That's when you get to this area. The previous day's candle was a green body candle, and you're opening between the open and the low, it comes down to 71%. If you'd open all the way beneath the low of the previous candle, and the previous candle was a green candle, and you open beneath the low, it's only a 54% chance of filling. And that makes sense, because if we open somewhere down here beneath the previous day's low, that means a lot of people are going to be caught off guard overnight. They looked at the previous day, it was a nice big green candle, or it was a green candle, and then somehow you opened beneath the previous low in the cash hours. Remember, we're talking about cash hours, so you'd have to go back to SPY to see what this is actually doing. So this would be opening beneath the low of the previous day. Somewhere beneath this low is where you opened today. So there was a slight gap down and the odds of coming back up to fill this gap. This is the gap that we're trading right here. This gap. This little area of that gap right there. That's the gap that we're trading. And remember, we're dealing with the 1615 close on purpose. So the gap was a little bit bigger. So we're buying into this hope, with the hope, a very an intelligent hope and bet that the gap is actually going to be filled with a 75% probability. So that's what the purpose of the other the separate overlays that are available on this indicator. I usually turn this off. I turn it on in the morning just to get a sneak peek, and then I actually turn it off again just and make up my mind on what I'm going to do, that the gap is likely to be filled. Obviously, yesterday was a huge day, and we had all of this movement up overnight. So this was a huge day overnight. And the odds of just continuing to descend when we're opening inside of this candle body were, pretty low before actually coming up to retest this close, fill it, and then maybe come back down, which we actually might do, and come back down maybe to the 2900 area before increasing higher. And that goes into some of the pivot trade ideas that I have for using Camarilla pivots, which will probably be another video that I will release soon, on using the core strategies again, the pivot trader, gap trader, and the EMA ribbon strategy, which all work together to give you some great daily trade setups and some great daily edge, is where the name comes from. So this is just another edge in the market to get another scalp trade that has some kind of a probability behind it. Add all these up over time, and you might get 50 to 100 gap trades throughout the year by picking one of these three. Forget Russell 2000, just stick with these three futures. And there's probably a probability distribution as well for DAX, GER 30, JPN 225, all the CFDs that represent the different futures contracts around the world that are the major indices. There's probably some probability distributions there also that are definitely worth trading. And these are just additional tools in the toolbox to increase your bottom line for trading in your trading career. And I trade the gaps all the time. They're very helpful, and they definitely offer some winning trades. And you will notice that many times at the previous close, when it's filled, it gets rejected. So this was another example back here. If I take the bar replay back to May 15th, we had a previous close that was unfilled, and it went from pre-market to regular market. We're inside the market. We opened, if we look at the previous candle body color, we opened inside of a green body candle, so we have the same odds, 75%. And if we walk this forward a little bit, we'll see that as soon as that fill happened right there, we filled that close, and then there was immediate rejection. And this is one of the key reasons why I use the 1615 close and nothing else. Sometimes the settlement works, sometimes the 1600 close works, and you have a near miss, but overall this is the best thing to use. And many times it is a great time to just exit your entire trade. And I front run these all the time. This perfectly hit the 2847 previous close, and I think that's what it was. Let me see. 2847, 2846.75. So it went one tick above. But many times you don't want to just put it right on that close. I will undercut it by maybe 2 or 3 ticks to make sure that I get filled to get out of the trade, because there's many times where going to be front run by other traders, other professional traders looking at the same thing, and you will not get filled to get out of your trade, and that's a real pain, especially when you were in a really great trade and it didn't get filled at the price that you wanted. Okay, well, it looks like we're coming back down again and doing kind of what we talked about, where we would fill the previous close and reject, and then this looks like an inverse version of a V bottom. If you press Alt plus I for inverted, you hold all the Alt key and I on TradingView, you can invert the chart. And that's kind of what this looks like right now to me. It looks like a nice little ABC correction, like this. Little flat wave here, and then move higher, and perhaps move to the previous day's low, and this inverted chart makes it look like the previous day's high. So that's what that looks like to me. Okay, well, this concludes the second video on Gap Trader. Good luck.